we're seeing that members are driving less. There's no doubt about that. Back at the peak in April, maybe 45% less than what we would have expected. And as we've come through June and July and the economy's begun to reopen again, let's call it, say, about a 15% less than what we would normally expect. And so because of that, our expenses are lower. And as a member-owned association, it's the right thing for us to do to return those premiums back to our members. So this is the third dividend that we've announced. We're announcing that this morning for all of our policyholders that are with us in June and July, and they'll see those in their accounts sometime in mid-August.
Can you give us any sense on the data for how frequently people are driving as the economies start to reopen and have kind of differing policies all across the country? Are you seeing people getting more antsy and looking to get out and do road trips and be on the road more? Is this kind of going to be the end of these dividend payouts to your members?
Well, I think one of the things we've learned is that there's a lot of uncertainty out there. There's no doubt that people are out and about. There's no doubt that they're driving more, lots of trips that people are taking rather than being on airplanes. But we also know that many companies, even like USAA, are asking their workers to stay at home. So we saw a really sharp uptick through June and then a plateau through the June and July timeframe. And I think every day is a day for us to kind of adjust and adapt and see what this week and next week brings in the way of consumer behavior.
There's a big debate going on right now over eviction moratoriums and whether that policy should be extended. Have you seen any kind of change in renters paying their renters insurance as a result of that moratorium expiring?
We really haven't seen it so much from the moratoriums, but what we are expecting as colleges are doing online and many of them not opening for their campuses to be face-to-face this fall. Many of our young adults have renters policies when they go off to college. So we're expecting to see a little bit of an impact from there. And we haven't seen it yet in our data as it relates to the moratoriums.
And I'm not sure if it directly impacts any of your own product lines, but I'm wondering where you come down on this debate of liability protection for businesses and the degree to which insurance might have to address something for employers if, in fact, that protection is not present in a bill.
Well, Carl, the way I look at this, and I think the way we look at it at USAA, if we've got really good regulation, we're asking companies to live up to those regulations. I think it's important to give some level of protection. It is extremely hard for an insurance company to underwrite or to plan for, or even have the capital strength to pay for unlimited expenses related with the pandemic. So we are very interested in what's happening in Washington today as both houses debate how they bring that appropriate level of protection back to businesses.
What would you say to those lawmakers right now, especially since you have kind of a window into the state of the consumer? You write loans and you have checking and savings accounts and so forth. What would you advise them to do right now?
Well, I think there's a balance, right? We need to ask all of us to operate under safe procedures. And obviously we're doing that here at USAA. But then I think you have to give companies an assurance that if they do, they're going to be protected in some way from liability claims that may come their way.